Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and I'll be guiding you through the latest news and trends that affect your portfolio. Today, we're starting with a story about the Indian real estate sector, specifically focusing on Puravankara Littedi's plans to launch new projects across India. The company is looking to expand its presence in the country's burgeoning property market, which has seen significant growth in recent years. We'll be taking a closer look at what this means for investors and how it might impact the broader real estate sector. In other news, Shakri Lokapriya, a renowned expert in Indian equity markets, shared his insights on the current state of the market. He discussed the potential opportunities and challenges that lie ahead, including the impact of global uncertainties on Indian stocks. Lokapriya also touched on various sectors, such as IT, metals, and banking, highlighting areas where investors might find attractive opportunities. One of the key takeaways from Lokapriya's analysis is the importance of selective buying in the current market environment. He emphasized that investors should focus on companies with strong fundamentals and growth potential, rather than trying to time the market or make broad sectoral bets. We'll also be discussing the recent IPO of Bharat Coking Coal, which saw phenomenal subscriptions from investors. Lokapriya described the company as a simple, powerful business with a strong market position and expansion plans. However, he cautioned that shorter-term investors might consider taking some profits off the table, given the significant upside already seen in the stock. As we navigate the complex world of stocks and finance, it's essential to stay informed and adapt to changing market conditions. On the Riskwiser Zone, we're committed to providing you with balanced and unbiased analysis to help you make smarter investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the complex world of finance and economics, and today we have a fascinating set of stories to share with you. In our previous segment, we discussed the potential implications of geopolitical events on global markets. Now, let's dive into our middle segment, where we'll examine the current state of the US dollar, inflation, and interest rates. We've seen some significant developments in recent days, with the US dollar rebounding near a one-month high following CPI data that was broadly in line with estimates. This has reinforced expectations that the Federal Reserve will remain on hold later this month, despite pressure from the White House to lower interest rates. The dollar index, which measures the greenback's strength against a basket of 6 currencies, was up 0.3% at 99.18, retracing losses from Monday after U.S. President Donald Trump threatened Fed Chair Jerome Powell with a criminal indictment. Global central bank chiefs and top Wall Street bank CEOs have lined up in support of Powell, emphasizing the importance of the Fed's independence. As Brian Martin, head of G3 Economics at ANZ in London, noted, "There's a very loud chorus of opinion coming from politicians, former Fed chairmen, and other officials that Fed independence is sacrosanct and cannot be interfered with." This sentiment is echoed by analysts from Capital Economics, who wrote, "Indirect attacks on the Fed's independence aren't likely to roil the financial markets in the US, so long as inflation there remains under control." Meanwhile, data showed U.S. consumer prices increased 0.3% in December compared to the previous month, lifted by higher costs for rents and food. This print has cemented expectations that the Federal Reserve will leave interest rates unchanged this month, with Fed funds futures currently pricing an implied 95.6% probability that the U.S. central bank will remain on hold when its next two-day meeting concludes on January 28. As we navigate these complex economic developments, it's essential to consider multiple perspectives and potential outcomes. The US dollar's strength, inflation rates, and interest rate decisions all have far-reaching implications for global markets and economies. We'll continue to monitor these events closely and provide you with in-depth analysis and insights. Welcome back to the Riskwiser Zone. As we wrap up today's episode, let's take a closer look at a developing story that's making waves in the world of finance and politics. It appears that tensions between the U.S. President and the Federal Reserve are escalating, with the President denying any knowledge of a Department of Justice investigation into the central bank. This has sparked concerns about the independence of the Fed and its ability to set monetary policy without political interference. Now, some strategists are warning that this could lead to a "Sell America" narrative, where investors become wary of U.S. assets and the dollar. We've seen this play out before, with the U.S. dollar tumbling over 8% in 2025, its steepest annual decline since 2017. Treasury yields have also been affected, with some predicting a steeper yield curve as expectations of more aggressive rate cuts grow. But it's not all doom and gloom. Some experts are taking a more cautious view, pointing out that the U.S. dollar is still a reserve currency, and the deep liquidity in treasuries, combined with the artificial intelligence boom powering stocks, could make any pullback an opportunity to buy. As we navigate this complex landscape, it's essential to remain fair and balanced in our analysis. We must consider multiple perspectives and avoid jumping to conclusions. The implications of this developing story are far-reaching, and it's crucial to stay informed and adapt to changing market conditions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.